Hi everyone, before we jump into today's episode, kindly give a like, hit a subscribe, turn on the notification so you're in the know when we drop another episode. This is the Phoenix Forum where we unpack the issues, the opportunities, and the hard truths affecting the Caribbean. Let's dive into today's insight. We all say banking in the Caribbean is hard. But what if I told you that the ECCB is quietly rolling out one of the most important reforms in the region's financial history? Something that could cut onboarding time from weeks to minutes. It's going to expand access and finally modernize how people do banking regionally.
We recognize that there have been a rebranding of the basic bank account from the nomenclature of it being a basic bank account, because there's nothing basic about the account. And so the ECCU First Step account offers our citizens in the ECCU that first stepping stone towards greater financial inclusion and for greater transactional history so they can move along their financial journeys.
For decades, opening a bank account in the OECS has been a bureaucratic ritual. Several in-person visit, proof of address issues, KYC duplication, long waiting period, no standardization, and inconsistent application of AML-CFT. And AML-CFT is essentially anti-money laundering and counter financing terrorism. And so the result of it means that tens of thousands of persons remain isolated outside of the financial system, and not because they pose a risk, but simply because the onboarding experience is broken. Of course, this slows economic activity, reduces financial inclusion, and keeps the Caribbean stuck in an outdated compliance culture. So let's dive right into it. Really, what is the ECCB simplified compliance culture? Well, essentially, it is not looser compliance. Some persons might say, well, hey, are we reducing the level of compliance? Are we becoming complacent? No. It is simplified compliance, or what we would like to say, smarter compliance. And what does it consist of? Okay, so the core initiative introduces a couple of things. One, tiered KYC levels. And by tiered KYC levels, it means that the lower risk accounts require less verification or less documentation, while the higher risk account would have an increased or a scaled up level of verification. So if you're a small mom and pop shop, you would not require those long drawn out list of I know who and you know who. It would just be a simplified process for you. Okay? 2, digital identity verification. Now, banks and credit unions can now utilize digital tools to verify your customers remotely. And this helps, for example, in the part when we speak about the standardization of the onboarding process for account opening at credit unions and banks, or at our financial institutions for that matter of fact. Because many times most of our members or our clients overseas, we would send them a huge cache of documents for them to have a notary public verified. In some cases, you don't even know if that's a bona fide notary public. But they would have to go through the expense of having to have those documents officially certified once signed and then returned to us by express mail, which takes away time, it increases the cost for onboarding, and it lengthens that period within which we can properly serve the customers of the banks and members of the credit union. And then from the risk-based point of view, the compliance burden will now, of course, match the profile. And what we're saying is that if a granny is trying to open an account with $200 in it, she shouldn't have the same compliance requirement as an institution that's going to be running $2-3 million through the accounts. And so that is why we made simplify. No, let's not make things complex. And this is what we're seeking to do with the simplified account. And then the last thing is that it reduces friction and access. So some persons can have their accounts open the same day. And you would be asking me, well, why is this a big deal for the credit unions and the banks? Well, here is where the impact becomes real. According to the ECCB official announcement, the First Step Savings Account is designed to make basic banking easy, accessible, and barrier-free across the entire OECS space. And what does it include? Well, one form of ID. So rather than having three forms of ID, proof of address, verification, and all of that, one form of government issue ID. So it can be your driver's license, your national ID card, your passport, or your social security card. So there's no excessive documentation, one form of ID. And then two, there's no maintenance fees. So you have the no or low maintenance fees. So you have the basic account remaining affordable for those persons who need that extra income not to be eaten up by the fees. And then three, there's no minimum balance. So the account is accessible even for low income users. Remember, this is an opportunity to bridge the divide between financial accessibility and financial inclusion and financial accessibility. So if we're going to penalize those with low balance, then we're not making it financially inclusive and accessible to those of the low income household. So this is one way in which this new initiative is going to definitely help in that department. Also, by having the simplified account, the user can have access to the core banking services like everybody else. So you can have online banking, you can have checks, you can have access to ATM services. Of course, there's a cap on where, and we're going to get into the figure because I think it's about $3,000 a month or $36,000 in a year. That is the amount that you can run through that basic account. So what it does, it helps remove some of those traditional barriers that we have come to face within the banking and the credit union sector. And for the credit unions in particular, there are some upsides for it, positive upsides. One, it increases faster membership onboarding. All right. So with that simplified process, you can now onboard your members, not days, but almost immediately. Two, of course, lower operational costs, because the fact that these members will now only require one piece of ID and not three pieces of ID where they'll have to take enough time to go elsewhere and get it, it means the process is going to be remarkably simplified for you and the membership. There's also going to be increased competitiveness because, again, agility, speed is the name of the game. So the faster you can turn around and onboard that member, it means the quicker that member can now enjoy the services that the credit union offer. And then there's also more digital pathways, and then it standardizes across the branches. But one of the things that helps too is that the standardization of this is not only across the banking sector, but once adopted by the credit unions, it's going to be across the credit union sector. So you can have one piece of ID and you can open accounts whether at the bank or at the credit union. And this is huge. This is huge. For the ordinary citizens, there's also some significant upsides to it. One, it's going to be easier to bank, of course. No long hassle, no long hurdles. It's going to be easier for you. Two, there's no need for excessive verification. So with one ID, that's it. You don't need proof of address. You don't need proof of birth paper and land paper and all of that. One piece of government issue ID. And that should do the trick. And then there's faster verification for you. So with that ID, you can be quickly verified. You can be quickly verified. And within no time, you can begin to start using the services that the credit union offer. There's going to be, of course, increased customer experience, increased membership experience, and greater financial inclusion. And this helps particularly for the migrant populations, those who are not native of the islands, and they're just coming in residences. They might not have two or three pieces of ID, but they may have one ID, a passport, a driver's license, social security card. That simplifies the process significantly for them. And this is where it brings it fully on board. So in our case, what we're doing is and really to bring this home, just imagine a young street vendor in Dominica or St. Lucia or Antigua who wants to open a business account for his small business. Usually he would have to provide a utility bill or a rental agreement. And if he doesn't have a proof of address, he would be stuck, essentially. But under the simplified banking, things have gotten significantly easier because now, under this first step account, he would be entering under what you call tier 1, which is the lower level of banking access. So all he would have to do is essentially produce one piece of ID. He will be able to open his basic account. He can begin saving. He can begin receiving payments. and accessing digital services. And this can all be done in the same day, depending on the institution that he's intending on opening that account at. So this really is economic empowerment. And of course, we cannot speak about all of the benefits without speaking about the risk and realities. And so for us that operate within the sector of the financial sector, this reform isn't about magic. It's about managing the risk, whether the risk of fraud, whether the AML, CFT risk, whether the risk in digital literacy, gaps in national ID system, the integration with core banking system. These are some of the risks that we still need to manage, of course. But simplifying the access doesn't mean that we're weakening the regulation. It means that we're strengthening it by making oversight more efficient and more risk aligned. And what essentially that does is that it builds a truly inclusive financial ecosystem within the OECS space. Because a lot of times, keeping those on the edge marginalized does not help financial inclusion within the system. And that is why I fully support the simplified process that this initiative is going to bring. And so for us, from my point of view, the Simplified Banking initiative is not just a banking reform, it's economic reform, because this is bringing real changes to the banking and financial sector. And we think that it's about to unlock a new age, a new stage of financial inclusion and access by modernizing the region's financial sector. Well, ladies and gentlemen, if this episode gives you clarity, share it with your board, share it with your staff, share it with your friends, everybody who needs to hear it. And don't forget to like, subscribe, and turn on the notifications so you're in the loop when we drop the next episode. Until next time, let's build stronger, more financially inclusive systems together. Remember, drop a comment, let me know your take, let me know what you think of this initiative and how you think it's going to impact you. And if there's any way that you think that it could increase financial inclusion and access within the space, drop a comment, drop a like, ask a question, and I'll get back to you. All right, until next time, let's build stronger, more financially inclusive systems together.